More than 3,100 homes got sold as per TREP board for the month of December. Sales are down more than 48% year-on-year basis with the average price of $1,050,000 in the GTA market. Inflation is already at the peak of 6.8% interest rate. You have already seen we are at the highest level since 2008. Lot of layoffs happening in the IT world or in the warehousing sector. What will happen to the recession? What will happen to the inflation numbers, interest rates in this month when we have new data coming in? Hello everyone, my name is Mandeep, and today's video we are talking about GTA real estate market. Obviously we are going to talk about inflations, layoffs, interest rate and the real estate market, what happened in the year of 2022. So let's go into real estate first. Last year, we have more than 75,000 homes got sold in the GTA real estate market. I know numbers are crazy, but they were way low what we saw in the peak of 2020 and 2021 when the COVID wave was there. As of now, if you go into the numbers, the sales are down 38.2% year-on-year basis because in 2021, that was a record sales we had. Can you imagine 121,000, more than that, homes getting sold in a year itself? That was a peak of Toronto real estate market. As of now, if you talk about 2022, the average prices are around $1,050,000, which is 9.2% down compared to last year. So if you have bought a home last year, the average price was around $1,150,000. Now it is around $151,000. So it is like almost 100,000 down from the peak of December 2021 to the December of 2022. You know what happened. As of now, more than 3,100 homes getting sold in the month of December. Obviously, detached, the average price is more than 1.3 million. Semi-detached, it is around million. Townhomes is more than 850, and the apartments is around 700,000. But if you see the numbers year-on-year change on the average price, on the year-on-year basis, detached saw a major downfall of more than 13%, followed by we have semis more than 14% downfall, townhomes 13%. So you can see overall it's a double-digit decrease in the prices of all those segments. Definitely condo apartments, we didn't see that much interest in 2021. They saw a fall of close to 1%. Now, yeah, imagine like condo apartment didn't see that much downfall on the numbers. Now let's talk about the particular areas in the GTA market which was really hot. If you have to see more than 3,100 homes getting sold, the peak was obviously city of Toronto, more than 1,100 homes getting sold. Then the next one, which is almost half of it, is a Peel region, which combined of Caledon, Brampton and Mississauga, followed by York region. It contain a lot of cities to name. Few of them is King, Markham, Newmarket, Richmond Hill. It's like 575 homes getting sold in that area. The average price varies on those. If you talk about, let's say you are focused on Halton region, you are in Oakville, obviously average price of all the unit types is more than 1.4 million. But on the other side, if you are focused more on the Peel region, the Mississauga is around million, same for Brampton. But city of Toronto, obviously Toronto Central is premium, it is more than 1.1 million. If you talk about York region, the craziest, hottest area, the King. Now you can see how the prices have cooled off. It is King, which is the most expensive city in the York region. The prices, average prices around $2 million. Followed by we have East or Aurora, Georgina. These are the like average price which hovers around 1.2 million for the whole area itself. Obviously Durham have around 380 homes getting sold with the average price of 874,000. Why? Because it's on the east side of it. The Toronto eastern prices are a bit lower compared to the central and the west part of the GTA area. Now let's dig deeper into these detached prices. So overall, the sales, if you have to talk about the sales number for the year, it was balanced year with 75,000 homes getting sold, and the top areas obviously will be city of Toronto, more than 27,000 homes getting sold, followed by Peel region, more than 14,000, and York, it's more than 12,000 homes getting sold in the area. If you have to go city by city basis, you have to see the trend which area had more number of sales. You can clearly say it'll be Toronto Central, more than 13,000 homes getting sold with an average price of 1.2 million. Then it's Toronto West, Toronto East. On the Peel region, it's very tough competition between Mississauga, more than 6,800 homes, and in Brampton is more than 6,500 homes getting sold with an average price of 1.1 million. And if you go about Halton region, Oakville and Burlington, similar numbers, 2,500 homes, and same for Burlington, but the average price is a huge difference. Burlington average price price is 1.2 million, but on the other side, the average price of Oakville is 1.6 million. Yeah, these are the neighboring city. Now you can see the huge difference in the prices. And on the York region, the average price is 1.3 million. Obviously, the king is the king city with the average price of 2.2 million, followed by the other neighboring cities are competitive on the price of, it's around 1.4 million for Richmond Hill, same for Vaughan, and the same for East and Stouffville area. And obviously, if you are in the Durham area, the average price is around 1 million. The peak is you have Ajax, more than close to 1.1 million. Then you have Brook area, Pickering is 1.1 million. So as you move away from Toronto, you can see the average prices goes bit down. So this was the average prices throughout the year. But if you have to dig deeper into the particular home types, we can see in the detached home, Brampton, most number of detached homes sold in the real estate market. It's 144 with average price of 1.1 million, followed by Toronto West 116, then Toronto East is there 103, then we have Mississauga 93. If you talk about Oakville, it is in the 50s, same for Burlington also. And if you are focused more on the semi-detached, in the semi-detached, the peak again is 53 units getting sold in the Brampton with the average price of 900,000. People love buying detached and semi-detached in the Brampton area. Mississauga is 28. And if you talk about the Toronto areas, then it's around number is 30 for Toronto East and the Toronto West. Other areas, the numbers are very, it's I would say in the single digit for most of the other cities. The reason being semi-detached constructions are a bit low compared to the detached and or the townhomes. Now let's go into the townhomes. The average price is around 900,000. The most number of townhomes getting sold is in the York region with 77. And on the area, if you have to go to a specific area, it's again Brampton 33 townhomes getting sold, followed by Markham 26, and Toronto had around 15 townhomes getting sold. Mississauga, I'm surprised it's only 8 townhomes getting sold. But for the Mississauga, it's like more of a condo townhomes and the apartments. The lifestyle is different. Same will be for the Toronto and the other neighboring cities. Let's focus on condo apartments. Obviously, Toronto city will take the edge in this because of the high density of apartments in that area. 646 apartments getting sold, and the Toronto Central has most number of sales with which is 407. 966 is the overall unit getting sold. Mississauga have 90 sales apart from Toronto. If you move out of Toronto, then Vaughan have 42. A lot of new constructions are happening in the Vaughan also. Maybe in the future we'll see once the people are getting possession of those high-rise apartments sales in the Vaughan area. And Oakville have around 14. Definitely Burlington have 29 sales getting happening, but the average price is a huge difference. If you go to Burlington, 29 units with the average price of close to 600,000, but on the Oakville it's more than 900,000. Now you can see the difference again on the apartment side of it, and the average price were 431. Yeah, lucky you if you have already bought it. But if you moved into 2022, even the market was a bit soft, the price is still $1,050,000. So you can imagine, but the sales have squeezed because if I go into see the 10-year data, the sales that we have seen in 2022 is the lowest. That is 75,000 is the lowest comparatively. Obviously, we saw the peak in 2021, and we had a peak in 2016 when there was a lot of immigrants coming into Toronto, and the market saw a boost, around 100,000 homes getting sold, and same in 2016, more than 100,000. And if you see the monthly stats, so you can see the peak was obviously in the month of February and March, where we had close to 10,000, even more than 10,000 homes getting sold in the month of March with the average price around 1.3 million. The sales are supposed to come down, and we can see it's only close to 3,100 homes getting sold with the average price of $1,050,000. So you can see if you bought a home in February and if you bought a home in December, there's a difference of around 300,000. So no hard guesses. You can imagine just because of the 7 interest rate hikes we have seen. Let's talk about the inflation consumer pricing index, which was 6.8% for the month of November. But now the new data is supposed to come on 17th of January for the last month of December. I try to notice the oil prices every day. It's just fluctuate. It's same around $1.40. If you're in Toronto market, it goes up and down. But I have seen the grocery prices have gone up. It'll be tough time on the inflation. So these are the numbers that we need to see because we are already at the peak. What happened because of that inflation number is the interest rates. The Bank of Canada, for the interest rate sake, they have to increase it every time. So that was a part of inflation. I'm a bit tricky. If it touches 6%, that'll be a good number to look in for the December month. But fingers crossed on that. And on the other side, you can see the interest rate news is coming. It is on 25th of January when the new interest rate news is coming. As of now, the overnight lending rate is 4.25% 6.5 Bank of Canada, which is the highest since 2008. So the prime lending rate is 6.45. So if you go to the bank will qualify you more than 8%. So that's a huge number to qualify. That's why, because people are waiting on the sideline. One of the reason is because they are having hard time getting qualified on the mortgage rate itself. Even the OSFI didn't give any respite to the buyers and sellers, because the stress test is still at the qualifying rate plus 2% of it, and plus the amortization, where it's a tenure that bank that give it to you to give the mortgage back. It is still at 25 years for the insured mortgage and 30 years for the uninsured. Hopefully something is coming on the OSFI side of it. But what is people's predictions on the interest rates? If you see what economists are saying, I'm not an economist, but what those people are saying is there are two scenarios that will happen. The Bank of Canada might be at their peak, or we will see a couple of more interest rates hike, maybe of 0.25 or 0.25 here and there, just based on the inflation number that is coming. So now you can judge where we are on the verge. We are basically on the verge of recession. If you talk about what is happening on the job sector, obviously job numbers are good, but there's a lot of layoffs happening in American corporate world, and the things will cross into Canadian borders also. As of now, Amazon have laid off more than 18,000 employees. Same with Vimeo, Salesforce, other big corporates, even Goldman have laid off those employees. It's around 10% of their workforce. This is a fear of recession. What happened in last 2 years was Bank of Canada was printing the money crazily. People were cash rich. They were investing heavily, they were spending lavishly. So that was the key. Even for the corporates, their results were very positive. But as of now, as the spending have decreased, interest rates went up. The only way where the corporates can show off that they are profitable is to lay off people. If you talk about Amazon itself, they have more than 1.5 million people on board. If they're laying like more than 18,000 people, that's a very small part of it, but it'll show their results positive and show them more profitable in front of their investors. That is a strategy that big corporates follow, but that might be a sign of recessions on the verge of it. So wherever you are, be mindful, be productive. What you are doing, it might hit your pockets. So this was the overall package journey that we are trying to talk about. But definitely we look forward to your comments and thoughts, and thanks for following. And obviously would love you to like this video and share with your friends and family, because it motivates us to make more educating videos for you. Thank you.